In this video, we're going to talk about 4 different legal structures when you're considering opening up a business and getting a legal entity set up to protect that business. So the first legal structure and most common legal structure is a sole proprietorship. A sole proprietorship is owned and run by a single individual. In terms of taxation, a sole proprietorship is a pass-through tax entity, meaning that the income made from the business just passes through to your personal tax return as the owner of that business. The business itself will not file a tax return. You will file your own personal tax returns like normal, and you'll include this income on your personal tax return. Now, a sole proprietorship, since there's no legal structure set up, you have personal liability. So anything that happens in the business, you are on the hook personally liable for it. And you could be sued and they could come after your personal assets that aren't tied to the business, like your home, your car, your savings accounts, to cover those lawsuit damages. However, as a sole proprietor, you can mitigate some of the financial risks by getting a solid insurance policy. So if you get business insurance, risk insurance, or a liability insurance policy, this can help protect your business in the case of any damage or lawsuits that occur. It's very simple to set up a sole proprietor business. You can pretty much just come up with a business name for your business, provided it's not already taken in your state, and you can start doing business as that business name. You'll need to check with your local city or county to make sure you don't have to file any sort of paperwork or business fees that you have to pay to be able to operate your business in your city. Once you've got all those boxes checked, however, you can set up quite quickly and easily as a sole proprietor as compared to other business structures, which we're getting into next. The next legal structure we're going to talk about is the general partnership. So this is a structure that would get set up if you have 2 or more individuals who are looking to come together to form a business partnership. Since there's more than one person involved in owning this business, you'll want to create a partnership agreement, which will be the bylaws of how the partnership will run, so that everything's legally outlined and it's nice and clear on how you guys will work together as partners in case any disputes would ever come up. This will include things like profit and loss sharing, how much ownership percentage each of you has, what the responsibilities each of you are to assume, and any provisions for adding any further owners in the future, how that would affect your partnership in terms of splits, ownership percentages, etc. These agreements will also outline what happens when someone would pass away or if someone decides to get out of the partnership and sell the business. You can outline how you want to go about handling ownership rights, management rights as well in your general partnership agreement. In terms of taxation, profits and losses get passed through to your personal tax return, similar to the sole proprietorship. In terms of liability, the partners of a general partnership are personally liable as there's no business protection layer like you get with an LLC or a corporation. Speaking of LLCs, this is our third legal entity we want to discuss. So the LLC stands for Limited Liability Company. It can be opened as a single member LLC, or you can have multiple members who are owners of the LLC. LLCs are going to have operating agreements that get drafted by an attorney that dictate how the LLC is going to be ran, how profits are shared, how management rights are distributed, and other terms of business that are important to follow through the operating agreement. You also want to make sure with an LLC that you're setting up a business bank account and keeping money separate for the business, not mixing it with your personal bank accounts. Anytime you start to mix business with personal, this can make you not look like a true legit business in the eyes of the legal people, and this can cause them to be able to pierce the corporate veil in a lawsuit. So in order to maintain your business properly, you want to have proper accounting, keeping funds in their own correct business bank accounts, and make sure that you're renewing and running your LLC like a true business. In terms of ease of operation and opening up an LLC, this is a legal entity that's a lot simpler than what corporations will be. So this is why most real estate investors use the LLC structure as opposed to trying to become a C corporation or an S corporation. LLCs are fairly cheap and affordable to get started. You can check around with different attorneys, but I got started forming my LLCs for free as single member LLCs through my accountant. He filed all the paperwork online and got me my tax ID number, and he's handling all my accounting and my taxes for my LLC. I just have to make sure I get on the secretary's website once every 2 years to renew my LLC when it comes up for renewal in my state. Additionally, I have to pay a renewal fee every 2 years as well to continue operation. Now, the thing to note about LLCs when you're forming them with multiple members, again, you're going to need to have this set up by a legal attorney. So in the case where I've had an LLC set up for partnerships in the past, it's cost about $500 to get an operating agreement drawn up and get the whole LLC formation all set up so that we were good to go. So check around with attorneys in your area to compare cost quotes, but you're going to expect $500 to $1,000 depending on how complex it is. All right, speaking of complexity, let's get into the most complex legal structure. This is the C corporation or the S corporation. These are going to be combined together in this section as we talk about corporations. So a C corporation has shareholders. These are separate from the business. So the business can make decisions separately from its shareholders. The C corporation, also being the most complex structure, has a lot higher entry fee as far as how the whole setup goes and the cost to get it started and the ongoing cost of running a C corporation. So this is again why many investors choose to use the LLC or just the sole proprietorship for their real estate investing business in order to keep costs down. Now the C corporation has a different tax structure than the previous three structures that we've gone over. With a C corporation, those profits are taxed at the corporate level, so they get hit with a corporate income tax. Any of those profits then that are passed on to the shareholders after paying taxes, those additional profits that get passed on to the shareholders are then taxed a second time at the personal tax return level. So corporations such as a C corporation have a double taxation to them. The S corporation is a little bit different with taxing. It's passing the profits through to its shareholders, just like an LLC, a general partnership, and a sole proprietorship do. So the taxes only occur once, and they're paid for by the shareholders on their personal tax returns. So in most cases, if you're choosing between a C corporation or an S corporation, a lot of real estate investors will elect to pick the S corporation as their structure when they're choosing between the two. But again, if you had the choice, you should probably stick towards the LLC instead. So overall, those are the four quick summaries of each of the different types of legal structures. Sole proprietorship being the simplest if you're a single person. General partnership if you're going to be going into your real estate with partners. LLCs are important if you want legal protection, as these have liability protection, keeping business and personal separated, unlike sole proprietorships and general partnerships where the owners are personally liable. The LLC, you are not personally liable, so this adds that layer of liability protection. And again, with corporations and S corporations, there's a separation between the owners and the business, so there's that legal protection there as well. Now, to keep things squared away, when you set up an LLC, you want to make sure that you're buying the property all cash if you want to take title in the LLC's name. Most lenders will not allow you to take the loan in the LLC's name until that LLC has established history. So once your LLC's been operating, it's been producing tax returns for several years, then you can start to open up lines of business credit through your LLC, and you can start to take out mortgages for rental properties in the LLC's name. So then on the deed, on the tax records, it'll be in the LLC's name. But starting out, make note that even using an LLC, if you're getting a mortgage, it's still going to be personally in your name, and your name's still going to be on the tax records if people are looking you up for privacy reasons. All right, so that concludes this video on the 4 legal structures to know about when investing in real estate.